Hello everyone, this is Modified Darvas Box coming at you after the close here on November 16th, 2021. And I'm here to do a quick video breaking down the long trade of PLBY, PLBY, because we're able to buy into it and it's had a successful earnings. And so I want to break that part down.
Yeah, baby.
Some Austin Powers for you right there. But anyways, before we get into that, let's take a look just for anybody who doesn't know who I am. I'm an individual investor who created a method of trading based on these two books. Well, it's one book with two different covers. How I Made $2 Million in the Stock Market by Darvas. Basically, in my opinion, there's only three states of trend that exist: uptrends, downtrends, and sideways ranges. And that's what I'm looking. I'm looking for the sideways ranges, and I'm looking to transact when the trend changes. Bullish Darvas box patterns look something like this, and bearish Darvas box patterns look something like this. Because we're in a giant bull market, I'm spending most of my time looking for the bullish ones. All right, well, let's get into PLBY, PLBY. So this has turned into a successful trade. You know, not only a successful entry, but now it's had a successful earnings report and earnings reaction. So let's see. I want to show you how I broke this down and what I saw. So I'd been tracking this name for a while because it had this big move prior in April, but then it gave it a lot of it up all back. Because I've been watching, set up a new Darvas box here when it starts to form. I set that up per my rules. Here is the prior one, how I set these up. And the prior one was more of a negative one, so I color that one red. And the new one down here, I put yellow. Yellow is always because it is new and hasn't given us a firm direction yet, red or green. So anyways, that's what it looks like on the weekly. And in fact, you know, if I back up the weekly, this is more what it really looks like. Something like that. And when you're like this, you're watching, you know, you create the box and then you're watching for signals. So what kind of signals were given? Well, some of the signals that I look at are for big volume. So as these days go by, day, you know, I note that there's a big volume here. Okay, you know, maybe I'll mark it like that, but it's inside the box. It doesn't really mean anything to me. However, as time went by, you know, I started noticing this here big volume, and look what it did here on this day, on October 19th. Yeah, it broke through the top of its Darvas box. Now, I had been watching this and watching it develop. I saw this prior day where it crossed my moving average, and I thought to myself, gee, you know what, this, you know, maybe that's a beginning of something. And then during that day on the 19th, right here, this is where I decided, okay, I think this one's going to go. Let's buy some. And I did. I bought some here at roughly 26. That was my first transaction. Now, some people would say, well, why didn't you wait until the top of the Darvas box, which could be anywhere here from between 26 and 27. Well, you don't need, in my opinion, you do not need a specific, you must transact at this price or the trade is bad or anything like that. No, it's really kind of like a range. So long as you have a good idea of where things may change, then transact how you see fit. And that's where you can be creative in developing your own system for trading. So started out on this day and it closed up here with a breakout. Very good start. That's exactly what I want to say. But then it went up and then it stalled. Well, that's a little difficult. And risk management says, well, if we're going to stall and pull back, you better be careful. So I sold here at 27. I made $1 profit. Woohoo! But you know what? After I sold, I kept thinking, look at this big volume here. And in fact, it had three big green volume bars in a row. you know, this pullback here has got very little red volume. And in fact, if I change this moving average from a histogram to a line, we see it was a very soft, gentle pullback. You know, not really much selling. So I decided to re-enter, and I re-entered this trade here in the 25s. And it turns out that was a good maneuver, because after all that point, the trade started to work and move up, and it did that all into the earnings date. As you can see, it moved up and it held up pretty well. Nothing too crazy, nothing too volatile. Now, as far as this trade goes, I did take some off before earnings for risk management here in like the 31s. So, you know, reduce the risk. I don't know how the stock's going to react to earnings. So let's just be cautious. Let's be safe. But you can see how I handled this. The initial buy at 26, the risk management sell at 27. Hey, you know, a profit's a profit. And then the reevaluation and rebuy, and then subsequently it worked right after. Now, how does this look on the weekly chart? Because my core is weekly. This is how it looks here. And I will mark this up like this, because now you can see we got big volume on the weekly. And if I break it like that, it looks something like this. So now I'll color this to green because it's working. And that's the type of volume signature I am looking for. Big volume buying interest coming out of a box structure, and then hopefully, knock on wood, hopefully good things happen. And luckily, in this case, those good things really did happen. And now we're in a great position for a longer term trend. Now, you know what? One thing about the system, yeah, you can run it technically, but Nicholas Darvas, the author of the books, was a techno-fundamentalist, which means you want to look at fundamentals as well. And in addition to looking at potential sales and earnings, I'll look at other things such as institutional ownership. And this is something which really stood out for me. This is a website called whalewisdom.com, and it shows on a delayed basis institutional holdings. And this is what stood out to me. Let's turn the video off. You can sort this by owners right here, shares held, and change in ownership, change in shares. You can see the buying and the selling of the last quarter, and then it gives the dates when they reported these changes. So you can see which institutions are buying and selling. The way I looked at it was, who are the biggest holders? And this one stood out to me. Rizvi Traverse Management, LLC. They bought about 41% of the company. And if you go back a quarter or two, you can see that that was relatively new. So you've got a firm that's buying 40% of the company probably here in March, April, May, somewhere in the zone. And do they buy it all at once? Yeah, who knows? But it showed up on the reporting. And that spurs me to then go on the internet and look at this firm. And you can look at the other holders like Fortress, BlackRock, whatever. But when we look at the firm, and I'll back up because I started on here. Well, we don't know who this institution is. Apparently, this is an investment firm that has a number of different portfolio companies, Square, etc. So there's a good chance, there's Playboy, there's a good chance they know what they're doing. Smart money. Well, the smart money bought almost close to 40% of all the stock in this company. So do you think they might know something? Yeah, there's a saying, if the big boys want it, then I want it too. In this case, the big boys wanted it. I took notice of it, applied the Darvas box structure, traded it successfully, and now we're looking at a really nice trade. So anyways, that's the breakdown of Playboy. Hope you found it interesting, and I'll talk to you soon. Thanks. Bye.